You don't mind if I call you that, right? Chat? Yo, what is up? Okay, we have people rolling in here. Just gonna give it 5 minutes, guys, before we start going into the strategy. So, if you don't know how Discord stage works, there's a chat box on the top right, and you can talk to me there. Tell me where you're from. Where's everyone tuning in from? What country? I want to see it. Like the weirdest country I've seen is probably Madagascar. I didn't even know people lived there. I thought it was a jungle, and then I realized that over 30 million people live there. So they have their own economy. They probably have their own stock market. The Madagascar. Wait, if you're from Madagascar, do you know what you're called? Like, as I'm from Canada. I'm called a Canadian. But if you're from Madagascar, what are you called? Do you have any idea? Sean, are you Googling it? Okay.
I should. I'm trying to get my camera to work. Now my camera doesn't want to work.
Oh.
I can see it on the preview, but I can't get it to show. Can you see me? You can't see
No,
me.
I can't see you. No. All right. So we have people from India, South Arabia. Nice. South Africa. Huge. Canada. There we go. I see you now, Sean. Puerto Rico. Puerto Rico. Always partying in Puerto Rico, eh? We got someone living in Spain, Australia, USA, Nepal, Bangladesh. Ooh, Bangladesh is busy, isn't it? Don't they have like the highest population per square kilometer? Or is that a different country? I think so. Madagascar. Is it really called a? Is it really called a Madagascarian? Is that? I feel like that's made up. Guys, can anyone confirm? Is anyone a Madagascarian here? But what would you call them? This is a big problem. I feel like we should just cancel the session and go and figure this out. Yo, we have three minutes. We'll start talking about the strategy in 3 minutes here, guys. It's just because the Google invite says it starts at 9, so just grab a coffee, chill, and we'll start talking about this trading type of strategy soon here. Yeah, it does. Yeah, Bangladesh does have a high population. Malagasy? Ooh, maybe it is Malagasy. That sounds like it could be real. Malagasy? Oh yeah, Malagasy. Yep. That's interesting. Wow. I never heard that once in my life. They need more representation. Malagasians? Wait, what would plural be? Oh no. He's Malagasy, but that's singular. Wonder what plural would be. Yo, what's up, guys? All right, looking like we have a nice group here of traders. That's great to see.
Yeah, another couple minutes.
Yeah, give you guys a couple minutes to roll in. How is anyone in the chat like completely new to trading, or does everyone here have some trading experience? And then also in the chat, let me know if you prefer Forex or futures. What do you trade, Forex or futures? Because they're both very similar. I do both because you can. If you trade Forex, you can trade futures. Yeah, Forex is so popular, eh? Yeah. Yo, JP, I recognize your PFP. The golden spatula. Yeah, like we have it's probably like a 5-to-1 futures to Forex. Or Forex to futures 5-to-1, outnumbered.
I see that so far. Then there's the lone crypto guy, Ray Trader.
Yeah.
The system still works.
The one crypto guy, the psychopath.
Yeah, right.
Although I guess if you like going long with crypto, if you're bullish on crypto, it's been a good year. It's been a good couple of years. I've never been into crypto too much. I just like it has a lot of potential, but it's also so volatile for me, right? And it's just like it's difficult. It takes a special type of person to only trade crypto. Right on. We have 95 people. We might break some triple digits today. All right, guys. So yeah, it's 9 o'clock. Let's get into it. I'm going to share my screen here. Let me just move a few things around and then we'll start getting into it, talking about. So basically, I invited everyone here today and I have Sean joining me. His Instagram is Student Alpha One. He is a day trader and professional analyst. He specializes in he would say mostly day trading. Sean, you specialize in?
Yes, day trading and swing trading for sure.
Yeah. And the concepts, yeah, there's a few different concepts between day trading and swing trading, but just for simplicity, we're going to be focusing on day trading today because the strategy it works quite well with day trading. I'm just moving a few things around here. All right, I'll share my screen. This is the problem with. Okay, so I'm sharing my trading view, guys. All right, so I'll just give you a quick rundown of kind of what happened here and why I have all these trades marked up on my chart here. So basically, after me and Sean did last week's session, based off of this kind of like simplistic entry model strategy, using something we call top-down analysis, where we started on a higher time frame and we go down to the 5 minute. I started running these trades since then, which was here, right, which was the beginning of the week. And since then, there's been 21 wins and 7 or 8 losses at a 1 to 2 risk reward. So the results are extremely good, and you can't expect to see results like this all the time. But it's nice when a strategy does run hot like this because you know it has potential, right? So when a strategy runs really hot, it's all about like how much potential does a strategy have when it's running hot, and how much damage can you mitigate when it's running cold. So right now it's just running so hot. You would have made like 25+% on your account if you were running this at a 1% risk per trade. So something really interesting. We'll talk about we've been calling it the PFK Alpha strategy because this is Sean's style of day trading with his top-down analysis, and his name is Student Alpha. So that is why it's called the PFK Alpha. And obviously, I'm prop firm kid PFK. So yeah, let's talk about it, Sean. So we're looking at gold on the 5 minute chart. I'm going to clear all of these drawings. We're going to start from the very beginning. So what's the very first thing that we should do when we start to analyze potential trades for this strategy?
For the strategy, we go at an hour, but I think it's always nice to look at the daily just to get the overall attitude of the instrument you're trading, just to get the general direction, even though on an intraday trade, I don't have to follow what the daily is doing. I follow more with my bias comes from the hourly, but it's nice to know, what is this thing's attitude on the daily. So if you flip it over to the daily, let's see what gold looks like.
Yeah, and I will say that this is something that I like to call situational analysis, guys. Like it's when you're marking up like key levels based off of previous price action to determine if that would be a good level to avoid or even trade out of, that counters any lower time frame entry model strategy, because you can't just run a strategy blindly with a couple indicators. Long term, you'll get cooked, right? So situational analysis is very important, and it gets better the more time goes on, when you become more familiar with the asset, like gold here. Okay, so what I believe what you like to do, Sean, is start with the anchored VWAP.
I'm going to anchor VWAP to that all-time high. That's going to be critical over there that you have on the daily. You're going to see how that's providing support today.
Right. So if you don't know, Anchor VWAP, guys, is a tool on TradingView. You can find it right here under the left bar. So basically you have to manually place it. It's an indicator, but you have to manually place it on the chart. So I have it right here on the bar. And Sean, you're saying you would start here?
Yeah, on the all-time high, which was, let me see what that date was. Back on April 22nd. Yep. So that's where you're going to set it.
Oh, yeah. There's some people like, sorry, Sean, there's some people that can't share the screen. Let me just
Yeah,
restart the screen just in case. But
yeah,
it's showing it's shared on my end. I'm just going to stop
right. And
streaming.
I can see it.
Yeah. I'm just going to reshare it just in case. Okay. Yeah, guys, if you can't see it now, it might be an issue on your end. So just try to, just try to leave and come back into the stage. I'll be here when you get back. Don't worry.
Yeah,
Okay.
right.
So the Anchor VWAP is a tool. You have to manually click it on some key levels, and then it automatically places it on the chart. So I'll give you guys an example here. I select the Anchor VWAP, and I'm going to click on the all-time high price, and it's automatically going to pull up this anchored VWAP line. All right. So that's the blue line here. I'm just going to hide the EMA lines for now so we can keep it nice and simple. So we can see that price is currently kind of testing this anchored VWAP on the daily, right? So looking at this, Sean, you're going to be very interested, I'm guessing, if the price, the daily candle here closes above or below this anchored
Absolutely. If
VWAP.
it goes below, we're gonna probably flip the daily bias in terms of it turning southward. But
Yeah.
it's going to be an interesting close whether or not we hold that. It could just throw a wick below it, which just means that there's buy support there.
Mm-hmm. And we could find a lot more on the second day too, because as you can see, guys, this is fundamentally, sorry, on the daily, the trend is still very, very bullish, right? Like,
Yes.
we're just consolidating at the top of this all-time high area here, but it seems like gold's been selling off a lot, but this is just a slight pullback, relative to like what's happened with gold over the last several months. So this is a very interesting level we're at right now. So this is one of those situations where it's situational analysis where, okay, if we're looking to go long or short, we have to be very careful around this level, because this level is going to determine, a lot of bias on some of the timeframes we're about to look at. So I'm just going to mark out this price area here, Sean, and then we're aware of it once we get to the lower time frame.
Sure.
Okay. Is there anything else you would mark out here for Anchor VWAP?
I would mark its recent high. What was that on
Right here.
June 16th? You're going to see that that's resistance. Watch that line form and watch what happens.
Right.
You can,
Oh, yeah. Yeah.
right. So it's going to produce a range for us between those two.
Okay. Okay, that'll look a little bit better when we go lower time frame as well, I imagine. Okay, so next we're going to jump down to the 1 hour chart, and this is where it starts to get interesting, guys. The 1 hour chart. So the 1 hour chart for the PFK Alpha Strat is to determine your daily bias, or to determine your trade directional bias. Okay, and the reason for that is we're looking for momentum on the 1 hour chart, either going bearish or bullish. Okay, so if the 1 hour momentum is bearish, we're only looking for sells. And the way we do that is we pull up these two EMA exponential moving average lines, the 20 and the 20 and the 9, correct, Sean? 20 and the 9?
Yep, 9 and 20.
9 and 20, yeah. Okay. So I have the two lines on here. The 9 is the yellow, the 20 is the blue. Okay. And what we're looking for here is we're looking for the EMAs to be either bullish or bearish. And the way you do that is if the 9 is above the 20, that's considered bullish. And if the 9 is below the 20, that's considered bearish. And not only that, we also have to consider the slope of the EMAs. All right. So like, for example, look how beautiful this bearish slope is compared to this situation here, where it's like a very indecisive and horizontal. Right. So these types of conditions here work very well for the strategy, and that's why it's been doing well. It can also work in these conditions, but it might be a bit more unpredictable because you're kind of switching between bullish and bearish. If you guys look at that, right? We were bearish technically here and then instantly back to bullish like 6 hours later. So that's something to be aware of, right? So Sean, what else would you do on the 1 hour chart here?
Yeah, nothing other than the fact that I'm aware of two things that you have on that chart. The 9 crossing down the 20 tells me that I'm a seller for the day, and then I'm
Yep.
also aware of any sells approaching into that key level anchored VWAP because there's support, and you can see that cluster of support for about 4 or 5 hours until it broke. So it's very
Hmm.
important if you're in a short, that would be so. If you're in a short, that's a great price target, right? So if you shorted up around, I'll make it up 33.50, and then 33.30 was a good price target. If you anywhere that you shorted, that would be a great take profit level. If you're looking for a take profit target,
Right.
we didn't know at the time that anchored VWAP would break, and now we're going to retest it. But those anchored VWAPs, those larger ones, make great price targets.
Okay. And what you can do here, guys, is like if you want to, you can go to the 1 hour chart here, right? And you can highlight, because we're going to go down to a lower time frame, you can highlight, this range where it's bearish, right? So let's just highlight that and then we'll mark it red for bearish. And then now, now that we know there's a psychological level here of 3,300, and that's another thing to consider, right? The psychological levels. Really even numbers are always going to be psychological levels, right? To break. And you can see there's a really clean bounce off that psychological level so far. We don't know how hard that bounce will be, but there are buyers waiting there because it is a psychological level of exactly 3,300. So that's another thing, another example of situational analysis that you need to consider when you're day trading. It's just another skill to have. So this is marked here, and then once that's marked, we're going to go down to the 5 minute chart, and this is where it gets interesting. The 5 minute chart is where we use the entry model, and the entry model is actually very similar to the 1 hour analysis. Because we're using the same EMAs. We're using the 9 EMA and the 21 EMA. But what we're looking for is shift in momentum that goes with that hourly bias. That's correct, Sean, right?
In alignment with it is your signal.
Right. So we marked out where the EMAs crossed over on the 1 hour chart here. Right. So now what we want to do is we want to look for crossovers on the 5 minute that signal a bearish sell off, right? So we have kind of a messy situation right here. So theoretically, you could this is very close on the edge of like being acceptable or not, I would say, right? Because the line it didn't really cross. It just kind of stayed
Compressed.
horizontal. Yeah, right. So this is kind of a range situation um, that you might want to avoid if you can. You could theoretically attempt to short here, but it's hard to say if it's fully acceptable, right? It's kind of like a gray area. But over here, it gets a lot more clean, right? We can see here we had buyers step in, the EMAs kind of gain bullish momentum, and then all of a sudden sellers are coming back to go with that 1 hour bias, and we have the crossover right here. See that, guys? The crossover is right there. So that's the signal that we're looking for to go short with that 1 hour bias. Okay, so it's going to look a little something like this. Crossover, you wait for the candle to close and you would enter somewhere around here on the candle open. And generally, what do you like to target with this
With that
strategy,
read,
Sean?
$10.
$10, yeah. So
Mm-hmm.
so guys, you can do a few approaches here. When you enter with this type of trading strategy, you can have a set take profit limit, and a $10 move on gold right now is kind of nice because you should be out of the trade within 1 to 2 hours, sometimes less if you're lucky. And then with the stop loss, it's up to you your level of risk for the stop loss. Okay, you could do a few things. You could make it a tighter stop loss, go 1 to 2 risk to reward, right? Risk your stop loss is at $5 and your take profits at 10, so that's a 1 to 2. Or you could go 1 to 1 if you wanted to give it some more breathing room, which is kind of nice in this situation because the 1 to 1 is currently above this previous high
That last local high.
of the last local high, and also the daily open price, because it's dotted blue lines, the daily open price. And daily open price, guys, is something you should put on your trading view chart 100%. So yeah, so this is kind of the situation where it's up to you as a trader to determine your risk plan, your risk strategy, but just know that the tighter you go with your stop loss, the lower the probability you have for the trade to work out, but the higher potential you have for big gains, bigger wins. So there's always a trade, right? Um, and another thing you can do, if you entered in on this trade after the crossover, if you don't want to do a set stop loss, you can also do a trailing stop loss. And I know, Sean, you do trailing stop loss once in a while. Can you give a couple examples of the type of trailing stop losses that you use?
So what I tell guys doing the funded accounts, if you need to trail, once we're in the money $5, we go break even and then trail it by $5. So that's the general strategy that my peer at Alpha Beta Report, Crypto John, trades silver, and he's highly successful doing it. I know you like to base it on the ATR, which is almost around five. It's probably $5 to $7. So it's kind of the same strategy.
Right, right. And since Sean mentioned the ATR, guys, so this strategy can 100% work on multiple assets. We're in the process of backtesting a bunch of different assets to see what it kind of aligns with best, and that's going to be part of the VIP Discord that we're working on. But with that being said, you can pull up the ATR right here. It's not working. That's weird. That freeze. Okay, maybe I froze. I don't know. The indicator's not working. Anyway, that's weird, right?
Yeah.
It's like frozen. I'm probably doing something weird.
It knows you want to use it.
Yeah, right. Okay, so guys, I can't pull it up right now, but on any asset, if you go to the 1 hour chart ATR, you'll be able to see the stop loss range that you should be using for day trading using the 1 hour ATR. So you can do it on oil, you can do it on EUR, USD, silver, whatever it is. That's a great starting point to check the 1 hour ATR, see what the pip range is for that level that it's giving, and then you can use that as a base point for your stop loss. Okay, because every asset's going to be different. So I'll go back to the 5-minute chart here. So let's just take another look at an example here where it crossed over again. So we can see this is kind of how the price action plays out in the ideal market conditions for this entry model strategy. So once again, this is the 9 and the 20 EMA. It crossed over. We had major sell-off. Now you could trail this. You can target 10 points if you just want to get in and out of the market, which has a lot of benefits, guys. I know in hindsight, there's a lot of profit left on the table, right? In hindsight, but it's not always that case. Sometimes you'll set the TP to $10 and you'll get a sniper exit on the TP and then it'll reverse, right? So sometimes it'll run and run and run, and other times you'll get in and out at the perfect time. So like I said, there's always a trade when you're going for bigger wins. But what you can do if you want to try to catch these big moves is you can have your exit condition be a candle close above either the 20 EMA or the 9 EMA, right? So as soon as you get a 5-minute candle close above one of these EMAs, so for example, if you did the 9 EMA, which is this yellow line, this candle right here, this candle right here closed above the 9 EMA, you could use that as a signal to exit the trade. And if we did that, you would have caught, in this situation, you would have caught 25 points on this trade, which is crazy. That would be a 5-1, right? If you went with a tighter stop loss. And if you went with the $10 stop loss, that would be a 2.5-1. So some benefits for trailing, obviously, but doesn't always work out perfect. For example, actually, let's look at this next trade setup. So we have another signal here. Let me just zoom in a bit. Okay. So we can see here the EMA started to turn and they crossed over bullish again, but we're not going bias because the 1 hour bias is bearish, right? And we had some buyers step in temporarily, and then all of a sudden selling momentum started shifting back in our favor, and it crossed over right here again. So right there, we would look to go short. But here's the thing about this short, guys. This is something that you have to decide if you want to take the risk doing, because you see this highlighted yellow area. This is the zone that we had previously marked up on the higher time frame, because it was a key level where we might find buyers. All right, and we did the same thing down here. Now, obviously, in hindsight, it looks like it works out fine for us, right? If we target 10 points, we were just in a trade a little bit longer. And we'll go 10, 10 there. We'll just go do a 1-to-1 just to keep it simple. So this is what that trade setup would look like. Okay. If we were to enter here. And to me, this is a bit riskier just because we did mark this level up. But, you know, that's kind of like something that you can decide for yourself. If, you know, honestly, if I'm seeing 3,300 down here, Sean, then I'm a bit more confident in this sell, because I feel like price is at some point has to go test that 3,300 level.
Yeah, exactly. I mean, if our anchored VWAP is approximately 30.30 and some 30.33, and we know that a key psychological price is 3,300, which has been proven today. This is always a proven level. I talk about it on my Instagram lives. That and I'm hunting 10 points. There's 30 points of room in there to get. Interestingly enough, check out what happened at approximately 9:15 my time, so 6:15 your time. We came up and we tested that after we crossed the anchored VWAP, that critical zone, came down. Then we retested it, confirmed it. It sold down. Now we've done it again, and we've confirmed that as resistance, and we might be selling into another short read.
Right.
So if price drops down here, we're selling into another short read, given the fact that we've identified that greater anchored VWAP that is resistance. Because when you're selling, you're looking for signs of resistance, resistance and the rejection down into your crossover. So, and that might be happening right here with price. I mean, if it happens, it looks like it's going to, the price at which it'll be measured will be around 33.24 probably.
Yeah, exactly. Yeah. Mm-hmm. So that's interesting, because like if we look at the current price action, guys, we know, like if we go back to the 1 hour, right, we can see how bearish and how much sell pressure is happening right now, right? And this is a lot of money being moved out of gold, right? This is a large move for the day. There's a lot of momentum, very steep, strong EMA directional bias on the 1 hour chart here for sellers. And if we go back to the 5-minute, we can take advantage of that momentum, because currently we're going through a pullback. Buyers stepped in around this 3,300 level, right? And you can see the EMAs have crossed bullish, but we're not going to go long, because there's no reason to go long against all of that higher time frame momentum, right? The higher time frame momentum and trend is like one of the main most important things to consider when you're running any strategy, because if I were to go long here, I am pushing against all of those institutional sellers that are moving the price of gold down at the moment, right? And I have no idea when that's going to stop. So there's no point to try to guess. All we can do is ride the wave with the big boys, and we can see that we crossed over bullish here on the 5-minute. So now all we're waiting for is for price to come up and then start selling off again. So these two EMA lines will cross bearish once again, potentially giving us a good entry. Now, what I would like to see here, if we're looking at this in real time, is I would really like to see this actually come up a bit higher, because I don't want to short it. Let's say hypothetically it started selling off right now. Oh, come on, give me my arrows. Let's say hypothetically it started selling off right now, and then these EMA lines are going to cross over, right? They're going to start to roll over, and then I have to enter short somewhere around here. And the problem with that is my TP is going to be like in this buying zone somewhere, and I don't know where the buyers are going to step in here, but it could be, and this might be a good situation for me to move my stop loss to break even if I'm halfway in the profit or something. So that's all about the situational awareness for every single trade. There's
You
always
bring up a
some
great
kind of unique quality, right?
you bring up a great point. I call that compression. So if we get a read compressed against a key level, I'm going to take less points. So if I'm hunting 10, but I get my read and there's only 7, I'm taking 7. Because there's going to be buyers. As a matter of fact, you can see the buyers have already been in there once, and we haven't actually hit the whole dollar amount. So I'm looking at gold futures when it hit 33.08. So
Yeah.
there's still 8 more points. It might drop down to 33.05, and if I catch my read at 33.12 on the way down, I'm not hunting a full 10 because I know that key psychological price will hold mean reversion buyers. I don't want to get swept by them.
Yeah, absolutely. So yeah, a few approaches you can take if you were to take a trade like this. Like ideally, if it pumps up for the rest of the day and then tomorrow at some point it rolls over again, that would be a much better entry to get up here somewhere. But if not, if we're down here and let's say we enter in at 33.07, right? Then either trailing the stop loss or moving it to break even when you're halfway in, just to protect yourself from those buyers suddenly showing up like it did over here is probably the best. And these situational analysis components, guys, is something I'm going to always be. That's why we do the live, right? Because when you're teaching a strategy, you have to look at real time events and price action and kind of come up with solutions. You can't just like teach a strategy and say, "Hey, let's just enter every time it crosses over and let's see what happens." But the idea for situational analysis is to filter out some potentially terrible trades that don't make any sense, right? So I think there's been a lot of really good trades with this strategy over the last 10 days, but it's not always like that, not always, and it's just like that right now. So that's why we're looking at it. Yeah, that's pretty good. So I just want to do a quick recap because I know a lot of people came here just for the strategy and kind of understanding the concepts. And we'll do this once a week, guys, and I'll create as much content as I can so you guys fully understand how it functions. But basically, we start on the daily. Oh no, there it is. This is the bad thing about TradingView. I know there's something I can do about that, but so we start with the daily. We mark up the anchored VWAP levels, which is a tool in TradingView you can find right here. Where can you find it? Yeah, right here, anchor VWAP, and I'll just show you how it functions. I'll remove the drawings. You just click. What we did is we set it to the all-time high, so it automatically applies when you set it to the all-time high. And we're just aware of this level because generally anchor VWAP levels act as major support or major resistance. Currently, we're waiting to see, how this candle closes, if it's going to be above or below, and then tomorrow we'll determine really like, okay, are sellers actually going to shift the daily bias from bullish to bearish? It's just something to be aware of. So what we did was we marked this level up here, and we also marked up the what I call a psychological key level as well, which was 3,300. So those are two levels that we just want to be aware of if we're selling into them, okay? And then we go to the 1 hour chart, and the 1 hour chart shows these two EMA lines that we have, which is the 9 EMA and the 21 EMA. And basically what we're looking for is we're looking for what our bias is. Is it going to be long or short? And currently, because we have a really strong, bearish momentum on these two EMAs, they've crossed over right here. Oops. Now we're looking for sells. And like I showed before, we can actually highlight, if it makes it easier for you, highlight the chart where it's crossed over so you know that you're currently bearish, right? So when you go down to the 5-minute here, now we know, okay, in this highlighted area on the 1 hour chart, we're bearish. So that really helps when you're kind of determining if you want to go long or short. And then on the 5-minute chart, we're looking for crossovers on the same EMAs, the 9 and 21. We're looking for clean crossovers. Here, we talked about that's very on the fence, right? It didn't really cross over. It kind of stayed aligned with it. But right here, it crossed over very nicely. So once we see something like that, it's a very nice signal to go short with that higher time frame bias, right? And then And then as Sean was saying, when we're going with our take profit, he likes to target 10 points, which is $10 move on gold. But we can also use the 1 hour ATR because you can apply it to any different asset. So you could go to like EUR USD, go to the 1 hour chart, bring up the 1 hour ATR indicator, average true range, and just use that for your take profit level, whatever that ATR shows. I wish I could show it to you right now, but here, I'll try to reload this actually. Leave. Here we go. Okay. So you go ATR, it's average true range, 1 hour. Okay. And let me go to like an asset, GBP. Let's try GBP. Do I have GBP USD here? There. GBP USD. Okay. So you see this red line down here, guys? That's the 1 hour ATR on GBP USD. And you see right here on the right side, that's 22 pips currently. So you can set your take profit to 22 pips, and that will be a really beautiful day trading range. So you can go to the 5-minute chart here, right? I don't know what the bias is. I'm just going to do an example of a crossover here. Let's go long, hypothetically long. All right, and then we could target 22, which is about there. And for your stop loss, you can either go 1-to-1, which in this situation, I think a 1-to-1 is good because it's below this range. But if you have cleaner price action, you could go 1-to-2, which would be like that, right? If you had cleaner price action. But 1-to-1's nice in this situation because you're below this previous range support here. So that's kind of like another example of situational analysis for your stop loss and take profit. So yeah, that's kind of the breakdown. If you want to do on multiple assets, use the ATR because you can't just say a $10 move for GBP USD. It doesn't make sense, right? Or for silver, that wouldn't make sense. So
yeah, the strategy works across all instruments. You just have to go back and back test or back measure what that read will typically pay on average. You know, I hunt 10 points in the Russell 2000, which is RTY or ES. With that, I hunt $10 in gold. I hunt 10 cents in silver. But you can go back and average it across your instrument to see, you know, what is the last 100 paid on average.
Exactly. Yeah. And I think, I think a really important note for everyone listening, when you're trading a strategy, any strategy at all, try it out on like 1 or 2 assets, right? And you just got to get a feel because there's so much subjective opinions, like of when a trade is good or not. Because like, yes, we have an entry signal, but the more you take the strategy and apply it to the asset you're familiar with, the more you'll become familiar with when does it feel right to do it? When does it seem to work out for me, right? Because I can't just enter every time there's a cross because there's so many other conditions based off of previous price action that might be hindering that as a good trade. And one of them, for example, is if we're looking at the 1 hour to determine our bias, look for yourself, like how strong do sellers feel currently? Like they feel very strong here, so I'm very confident to go short here. But like, what about like over here where it crossed over, right? It crossed over here, and it was like super choppy. So it's just something you have to be aware of when you're running any strategy. Is like, how do the current market conditions feel? And the more you trade the strategy, the more familiar and the more of a feel you'll get for it, right? So it's just something to apply. Yeah, that's good. I think that's a pretty good breakdown of the PFK Alpha, a good intro breakdown anyway. We can be talking about it every week or so. Maybe we can take a couple questions, Sean. What do you think?
Yeah, I've been trying to answer a lot in the chat as you were
Oh,
doing.
thanks. Yeah, thanks.
Yeah. So Rich Rational, usually on this particular read, like on gold, I have a $10 stop loss and a $10 take profit as normal. And then, like Daniel said, we confluence that backside of the stop loss to a near recent high or an open price or somewhere we can, or a VWAP that we can
Yep.
hide behind, maybe even reduce our risk a little bit. And
Yep.
sometimes I have to expand my risk. If I'm looking at 10, but there's a VWAP that's critical that's at 12, I'll go behind 12 because I have a greater confidence, and I call it a VWAP shield. I have protection behind that VWAP.
Right. Exactly. Yeah. So that's exactly what Sean was saying. It's like when you're setting your stop loss, take a look at previous price action on the 5 minute chart, guys. You don't need to look at the 1 hour or anything crazy like that. The only thing that you should do is like look at the 5 minute, look at the previous high candle. You know, we had a rejection candle right here. I'm not going to call it a liquidity grab because there's so many problems with that terminology, but like look at that right there. We can set our stop loss above that and have a little bit of a defense, right, against buyers coming in and pushing this up. Maybe it creates a nice, if sellers were here once, then the probability of sellers being there again is a little bit higher. So you can use that as some kind of defense for your stop loss. So when you're setting up your stop loss, always set it up as defensive as possible, right? Keeping it reasonable. Obviously, a really defensive stop loss could be something like crazy, right? But that doesn't help anybody long term because your losses are going to be crazy compared to your wins, right? So you have to keep it reasonable, and that's why Sean does 1-to-1 risk to reward a lot of the time. But if you have really clean price action where where you don't necessarily see any reason for defense, then you can make it a bit tighter. You go for a 1-to-2, right? And that's one of those things that the more you trade the asset and the more you trade this type of strategy, the better of a feel you'll get for each trade individually, right? Okay, we had a question. Okay, let me scroll up a bit. When will the VIP channel be available? Yeah, so we're working on that. There's a lot of really interesting features we have coming for it, but like having trade ideas that kind of run behind the strategy are going to be in the channel as well on multiple assets. We're going to try to run like 4 or 5 of the biggest assets like gold, silver, EUR, USD, maybe oil. I have to test oil first. Oil's a bit funny, so I'm not sure. And there's a lot of other really cool features. I'll get on my email list, guys. Actually, do I have the email list? My email list. I don't know if I have the link, but I have a wait list for the VIP for anyone that's interested. It's in my bio on Instagram, so just get it there. What else? What other questions? Anything else good? Let's see. Why use anchored VWAP? Yeah, why use anchored VWAP, Sean?
Yeah, so that, and then the question of where do you place them. So the anchored VWAP is the average volume weighted average price. Then there are many indicators that you can use when you're doing technical analysis. Institutions, in other words, big money, not us piss ants, us little retailers, use anchored VWAPs, not exclusively, but very heavily. Matter of fact, when I'm looking at many indicators, whether it be Fibonacci's, volume of price, regression trend lines, and anchored VWAPs, I weight anchored VWAPs 2-to-1. So if I have information from an anchored VWAP versus information from a Fibonacci, I'm going to trust that anchored VWAP twice as much as I do that, because that's how institutions move their money. There's a whole book on it if you want to read that, the anchored VWAP by Brian Shannon. You can buy it on Amazon. Hashtag I don't make any money off of it, but it's a great book that explains that, so we don't have to go into a dissertation on that. And then where do you place it? An anchored VWAP should be placed at when you open the width of a chart, it should be on the low of the chart, the high of the chart, and then any catalyst. And again, I'm saying the chart because if you're looking at a weekly, a monthly, a 5-minute chart, you can set anchored VWAPs there. In general, I like the all-time high, and then any recent highs or lows, and then critical catalysts like
Yeah.
the announcement of war, the announcement of peace. Like when you see significant movement, you want to set that anchor VWAP there. Then
Yeah.
it calculates the price weighted by volume moving forward.
Yeah. And generally we can see, like, if you're looking for anchored VWAPs, I pulled up the 4-hour chart here, guys. You can see a sharp turn in bias, or like a really hard rejection candle followed by a turn. You could use anchor VWAPs in multiple situations here, but the more dramatic the better, because there's likely some kind of catalyst for that movement, and catalysts are a great determination on where you should set it. So like we can see here, we had really strong sell off here, and then we had buyers step in. So something happened here I don't know exactly what it was, but it completely shifted the bias for gold from bearish to bullish. So you can mark your anchor VWAP right on that line. And as we can see that, I'll just delete this one so we can see it more clearly. But we can see that it acted as support on so many different occasions. Like we had a beautiful retracement bounce there. We had a little bit of oversellers here, but eventually it came back up, right? Retested the anchor VWAP, came back up. Look at this, bang here, right there. And now we're testing it again, right? So we're the next couple of days is going to be very interesting for this anchor VWAP because it also aligns with the all-time high VWAP that we had recently placed on the chart, which was here, right? Right there.
They should almost be the same.
Now they're both aligning, right? So this is a very interesting price point for gold. So always keep an eye on that for support. Okay, let's take a couple more and then we got to wrap it up. What do you think? See anything good? Someone said, how can we scale a trade, add positions? So I don't personally add positions to a winning trade just because I day trade and I try to get in and out of the trade as quickly as possible. I'm not a scalper, but adding to positions kind of complicates everything for me a little bit. I'm not really a DCA trader, which is dollar cost average into a position. I never have been. I think it can be really effective, but prop firms have major issues with DCA. They call it martingale, right? So, or they classify it as martingale or adding to a losing trade, or it's just there's so many issues that it comes with. So,
Or gambling, guys.
yeah, they'll just flag you for prop firms will use any excuse they can. The best thing you can do with the prop firm is just to take one trade a day, and then that's it. Then they have a really hard time finding any reason to deny your funding or your payout.
I want to clarify real quick. Again, people are saying a VWAP or VWAP. The volume weighted average price is the volume weighted average price. A VWAP and the VWAP are the same thing, calculated the same way. The difference is the VWAP by itself as an indicator has a set point by which it's always anchored, and that's the open price. So when we say VWAP, that is anchored at the open price of the instrument. An anchored VWAP is anchored at the point by which you anchor it, right? So a VWAP is always anchored at open price. An anchored VWAP is arbitrarily anchored where you anchor it.
Yeah, exactly. So the anchor VWAP is more of a mechanical default setting, and then anchor VWAP you have to manually set
right
yourself. But they use the same. It uses the same math essentially, right?
Right. Correct.
Yeah. Okay, guys. That's been 45 minutes. That's all we can do today. Sorry, we can't get to all the questions. There's so many people in here today, but we will have this up on the YouTube, this session. So you can check it out there if you missed anything. Hopefully that was helpful. I want to do more sessions as well with like risk management and how to apply strategies with risk management to pass prop firm challenges and to hit payouts and stuff like that, which will be useful. But if you're not following Sean, follow his Instagram. I'll post it in the chat here.
We have it in the chat. I'm live every Monday through Friday at 9 a.m. Eastern Standard Time, going over the key levels and my trade ideas for the day.
Yeah, it's free, guys. So yeah, go check that out because that is super, super valuable information. And Sean is like the real deal. He makes money trading. Trust me, that's what he does. He's not an influencer. He's a trader. So yeah, jump in on him for sure every morning. That is so valuable. Alrighty. All right, guys. Have a good day, and I will see you next week.
Thanks for coming.
Yeah. See you later, Sean.
See ya.